Hey guys, thank you for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin's critical geometry based on support and resistance lines. Of course, this is all dubious speculation, but it's fun and it can be helpful. Let's jump in. So as we can see here, we've been bouncing between those two trend lines for a while now, for about 10 days or 12 days now. These are based on older support and resistance lines, which in combination with everything else is what we call a critical geometry. So what does that mean? That means that for as long as we're bouncing in this upsloping channel, the probability of us breaking upwards is higher than going downwards. But we're going to give you the two scenarios. If we break up, the longer this takes, the higher we'll be going, and the higher we'll be coming back to test. And if we break down, we would find some serious support at 26,500, as we already have 3 times on Wednesday 22nd, on Monday 27th, and on Tuesday 28th. On Monday, it was right to the T. Therefore, we do have a good support on 26.5. The next support line, and probably the last for a while, would be around 25K. But if we were low probability to break down under it, we would re-enter our Gaussian channel here, which means we would hit 23 and possibly attempt to bounce back out of the Gaussian channel, because by that time, the middle of the Gaussian channel would have hit this trend line. And if we failed there, which again is an even lower probability, then we would go to the lower side of the band, which by that time would meet our trend line here at 22,500, which again is an even lower probability. And then the final probability would be this last trend line. That would be around 20,900 or about 21K at the time, especially considering that the 200 moving average, which has been following our trend line here to the T, would be at exactly 21K. So as you can see, that would be our final destination if we were to crash down, but it would take some really heavy weights to bring us down anytime soon, at least. The highest probability for now is continuing to bounce between these two upsloping trend lines, in which case we would end up breaking upwards. Now, in the case we end up breaking up, this is how it would look. We would continue bouncing, break up, and possibly hit our next trend line, which at the time would be 33,700, at which point we would find resistance and come back down to retest the lower trend line, which would now become support, and that would be around 30K. So 30K would become our new support, and then we would go back up. At that point, of course, our trend line would be even higher up. Now, the longer this takes, the higher the upper trend line will be, the higher our ceiling would be, and the higher our retest would be as well. Based on this critical geometry, April is looking like a bullish month, coupled with the fact that QT is most probably over, seeing as the last one was just a safe face. Based on everything that's been happening, we don't see any more rate hikes coming into the near future. I hope this was helpful to you. If you like this kind of content, you know what to do. I'll see you around.